Hi, I'm Keith Cottrell, and welcome to this update on the impending financial crisis. An update is required following Trump's victory this week, as it's going to be an interesting play in the markets. And I'm going to start off with that actually, because there's a lot of hoopla and fuss and nonsense, as usual, same with Brexit. And frankly, these are just sideshows for what's really be going on behind the scenes, that I've said many times before, but most people are just preoccupied with the status quo. They want it to remain that way. And irrespective, had Clinton got in, it wouldn't make a fat lot of difference, because underlying all of the political establishment is a far greater issue, and that is debt. So how does Trump fit into all of this? Well, it's quite simple, really. As it says on Zero Edge, he won because the elite want him there. The global economy will collapse. 100% right. The economy was going to collapse, as I've just said. All of this other stuff, side issue, riots, Brexit, whatever. Who cares? It's really a red herring compared to what's going on. And I wrote about this in 2011, continued to talk about it, take steps to protect against it, and it's now coming to fruition. And by the time we get to January, it will be a completely different story. The markets are going to be held until we see Trump get inaugurated, and after that the carnage will start, because it is unsustainable. As I recorded in the video, on the 28th of September, the printing of money has created massive bubbles in stocks, housing, and more importantly, the debt market, the bond market. We have the biggest bubble in history of bond debt, some of it negative, 33% to be precise, and it is unsustainable. And the great thing about Trump getting elected is everybody's attention has been removed and focused on Trump winning, all having hissy fits and all the rest of it, when the problem is the bond market. Pensions, housing, everything is inextricably linked to the bond market. And this was going to go whether Trump was in or not, but as we've seen, there's no doubts about it. He's the fall guy for what's actually coming. This lets everybody else, Obama, Yellen, Greenspan, Bernanke, it lets them all off the hook, because they can now say, well, the American people voted and it's Trump's fault. It's not Trump's fault. I'm not a supporter of Trump. I just make that clear. I am apolitical. I don't care about politicians. I don't care about politics. What I care about is the financial system and how it's rigged, how it's manipulated, and how it's going to impact on people of my age, 53, when they come to retire, because of the debt that successive governments have actually run up. And what people tend to forget is that whoever gets in, it's irrelevant, because they still have to have money, whether it's for healthcare or whatever it is. That money still has to come from the banks, central banks or whatever. And they just don't realise it. They buy into these naff policies, these spurious policies and ephemeral policies that never actually come to fruition. And it's ever so simple why they don't come to fruition. And that's because they haven't got the money, because of the debt that is behind all of this. Anyway, I digress there. So we've got a situation where now the bond market is starting to unravel. And even yesterday, actually, let me show you the charts first so you can actually see what's going on. This is the 30-year bond. And this is a daily chart. I don't need to go into details of what it is, but you can see that the market's been down since Trump was elected. Great excuse to start dumping the bond market, getting rid of the bonds. But the biggest problem is this, and this is the yield. Now let me explain what the yield on a bond is and why it's important that you understand this. The yield is the interest that's paid on money that you loan to the government. They call them gilts in the UK. So, as you know, the bank rate in the UK is now 0.25%. Same in, well, actually, I think it's 0.5% now in the US after last year's increase by Yellen. And we've got bond yields now on a 30-year. So if you give your money to the government for 30 years, they will give you 2.9%. Now, they've only got 0.5% bank rate. The yields are going up. Guess what? The interest payments on the debts at some point are going to start going up as well. And this is going to cause a major problem. The major problem is that they don't have enough revenue from tax receipts or whatever to cover the interest payments on the debt. That's a separate video. I'll go into that at some other point. The principle here is that when yields go up, the bond price goes down. or I'll put it another way, when interest rates go up, bond prices go down. So the government, or not the government, sorry, the Federal Reserve are going to be forced shortly to actually increase interest rates, whether they like it or not, because the yields are starting to increase. Nobody's going to be interested in a bond with half of 1% when they know they can get 2 or 3%. And what happens is this devalues the bonds. The bond bubble that was created under Yellen, the QE program with Bernanke, the trillions that they actually printed and put on the Fed's books actually starts to unravel. And this causes a knock-on effect, which is what Deutsche Bank are talking about here. Deutsche warns of imminent domino impact from stocks, from bond carnage and soaring dollar. And this is the trigger point. This is the trigger point of the collapse in all of the major markets. We saw that one. We've got over 1 trillion in bond losses in days, second worst week ever. Not good news. Surging bond yields signal pain and not growth ahead of us. Too right it does, because thanks to the administration through the Obama presidential reign, they've done nothing but print debt upon debt upon debt. When George Bush took office, it was 5 trillion of debt. When he left, it was 10 trillion. Obama has printed over $12 trillion, or close to $12 trillion, since he's been in office. It just shows you how the debt is becoming exponential. So Trump hasn't got a cat in ells. It's just all going to fall apart under his watch, because they cannot service the debt that they have. And this is where you get this knock-on effect that is going to go around the globe, because people don't want 0.5%. They want more for the risk they're actually going to take, especially with an unknown quantity like Trump. So this is why you're seeing the the yields increasing on these bonds. To add insult to injury, what's happened, well, I wouldn't say adding insult to injury, actually. What also has happened in the last week as well is that the price of gold has been hit. And if you've seen the second video, I talk about protection of precious metals and whatever. So people will be saying, well, that's no good, is it? You know, the markets, the gold market's crashed. Absolutely. And I'll tell you why it's crashed. It hasn't crashed because there's been sale of physical gold. This is, again, the rig game that we saw with Deutsche Bank in my second video, that were fined for manipulating the markets. They're still manipulating the markets. The bond market was closed yesterday. This gave them the ideal opportunity to come in and sell 10 billion of gold. They didn't sell gold. They sold paper gold. The futures contracts. They slammed the price. And why did they slam the price? So the billionaires and multimillionaires in the USA and anywhere else around the world could buy gold, the physical gold, cheaper. That's why this is done. This has been done for the last 10 years. There's nothing new in this. It's just an ideal opportunity to actually buy the physical gold at a cheaper price, knowing full well from January there are going to be a significant sell-off. And watch the price of gold and silver come January and February, because it'll be a lot more expensive than it is now when the bond market accelerates, becomes out of control, and everything starts falling apart, including stocks, and also a devaluation of the dollar. The dollar is up at the moment because there's stability. Obama's still there. It's not a problem. And as I keep saying, they're going to hold this until Obama leaves. Make no bones about it. The secret meeting that he had with Yellen back in April under the Special Procedures Act, I think it was called, or something along those lines, he, in no uncertain terms, would have told her, this is not going on my watch, Yellen. No doubts about that whatsoever, just as Hoover did during his presidency when the economy wasn't good either. So that's really what's going on at the moment, and how I see it going forward as well. Also, the option premiums have dropped, or the risk on the option premiums have dropped significantly as well. I'll just pull that one up for you. And let me just explain why this is also ringing alarm bells as well. I'll just bring this through, and there we go. So this is when you in the markets, you can actually sort of bet. These are called derivatives, options and futures and so on. And that's what you saw with gold, by the way. It's a derivative contract. It's a gambling instrument. It's not the physical. And this is another reason there's a problem in the market as well, which I've spoken about before in the other video about derivatives. But one component part of these bets you can bet that the stock market will move lower, and they're called options. And this line, this yellow line here, shows you how much the traders think the market is likely to go down. Now, the odd thing about this, it actually works the opposite way, and it's something I uncovered in the early 90s, and there's never failed so far. And that is, all you have to do is look at this and watch it come down to these sorts of levels down here, and the underlying market will start to fall apart. When it's quiet and everybody thinks it's fine and there's no risk, then the whole thing starts to fall apart. So the premiums, there was a risk, you see, that Trump would get in and the market would collapse. And then everybody realised, well, why would it collapse? Because Obama's still there until January. So all of a sudden the market rallies. You get the shake out of 1,000 points. The market rallies. And the premiums, the risk disappears. There's no risk of the market collapsing until Trump is there by his Todd, as they say. So you've got a situation here where the options are becoming cheaper and cheaper, and the lower this goes, the bigger the correction will be, as we saw on the 24th of August last year. Last year, I mean 2015. And there's a video on the channel that you can see about that as well. I spoke about that and predicted it as well, just by using this one indicator. But I don't want to get into the technicals of it. It's ever so simple. When this gets down to around the 10% area or lower, you will see a massive correction in the stock markets. But this time it's going to be different. And the reason for that is what I spoke about before, and that is the bond bubble. You've got to watch the bond markets. The bond market is crucial because it's tied in with government debt, the printing of money, fiat currency, not underpinned by any form of gold standard or anything, just the good faith to honour the payment. And it never works given the long term. We're now into the 45th year of this sort of nonsense. So all of the debt is the problem, not Trump. As I said before, he's the fall guy. He's the one who is going to actually get the blame for all of this. Now, I don't care whether people get pleasure from that or not, but the backdrop is, from Bush, Clinton, Obama, they've ran the US debt to a point that it is virtually impossible to keep going. So he is the perfect patsy, fall guy. Call him what you want. It doesn't make any difference. He's in there. The people voted for him for whatever reason they voted for him. Again, I don't care. All I care about is that the financial markets are reaching a point where they are going to have a completely different complexion, whether Trump was in or Clinton, because of what's behind the scenes there. And the same in the UK and globally, because once the US crashes, then everybody else catches a cold anyway. It's always been the case. So I don't know about Happy New Year. It's going to be a very interesting new year, so we'll see how things pan out. Anyway, that's it for this video. Could waffle for days, and there are more important things to do, like getting on and enjoying life outside of this. But just an update on what is likely to happen going forward with Trump at the helm. Okay, that's it for this one. Please feel free to subscribe. Thumbs up, all the usual stuff. Check out the Facebook page as well. And of course, feel free to comment as you wish. That's it for me in this one. I shall see you in the next one. Thanks for watching.